Hey everybody, Jared Duckett, Duckett Ladd Dental CPAs and Advisors with my business partner, Bill Ladd. And Bill, time to jump on here and inform our clients and just everybody else who wants to listen to this, the kind of the tax stimulus we've all been talking about. And we'll date this a little bit. This is 12/29. What is today, Bill? Tuesday.
Tuesday.
So we've been really waiting to kind of release anything on this. I mean, I'm sure you guys have been following this, and it's kind of like, it's you hear, well, hey, the House and the Senate have agreed to something, and then it was kind of hurry up and wait, right? We just kind of waited and see what the president was going to do. And I guess Sunday night, right, he signed this bill, this stimulus package, and we're just going to take a little bit to kind of unpack it. You ready to go in and dive into this, Bill?
It's funny. We haven't done one of these since what? Probably spring, when this thing first came out. And that will just tell you, there was a lot of uncertainty in the initial bill. And it took from April passage all the way to December 29th to get some clarity, some much needed clarity on some things that it really kind of held people back from making good decisions. So nothing like our federal government for teaching us all how to procrastinate and wait right till the end of the year to make a decision that could have been made months ago.
Yeah, and some big, and we'll hit it right at the beginning, some big changes that, I mean, really our clients, a lot of our dental clients, this really impacted and benefited.
Sure.
So let's just dive in. And just to begin, to at the beginning say this, we're not going to dive deep here. We're going to hit the very high points, really how it's affecting most of our clients. Again, we always say, if you're not one of our clients, go contact your tax professional to see exactly how it's going to impact you. So let me share this screen real quick. I've just got a quick slide deck we'll kind of roll through real fast. Bill, can you see that on your side?
Yeah, you got it.
All right. So let me just jump in here. Let me present this. All right. So this thing is called the Consolidated Appropriations Act of 2021. Now you guys hear it's a 5,500 page bill. It is a 5,500 page bill. I don't know, Bill, if you saw it, they actually had this thing on the dolly wheeling it through Congress. I mean, it was unreal, but a portion of this is related to kind of the coronavirus relief. A lot of this was, I don't know the correct word, but combined with a budget bill and everything else. So we're just going to hit the high points of this bill.
It was kind of unfortunate because I think it would have been better to have the stimulus bill stand on its own, because then it would be certainly a document that would be much easier to understand and determine whether it was good for the nation. Instead, it was put in with a bill that's basically intended to fund the U.S. government, from what I understand, for most of 2021. So, I think there was a lot of, information going around that really was kind of distracting from the point in my mind, which is, what does the stimulus say? And you could argue the merits of the other stuff, and that's really not our job. Our job is to look at the provisions that came based upon the compromise on the stimulus. And there's some stuff in here that could certainly be beneficial for some of the taxpayers we're working with.
Yeah, and a lot of times on these video guys, if you remember back in the CARES Act, I guess, is we would pull up the exact legislation, highlight it, and kind of go through it. And this is kind of hard to find stuff in this huge bill. So this is really why we just put together a quick slide deck. But just jumping in and kind of hitting this thing head on. I mean, a big thing in the CARES Act, if you guys remember back the beginning of the year, was PPP, right? So that Paycheck Protection Program. And this bill that was signed Sunday has some changes to that program. And the biggest change, I say the biggest, that's my opinion, that's impacted most of our clients, is the whole, the forgiven PPP loans will now be deductible. If you guys remember, this thing came out in the CARES Act, they specifically said it was a non-taxable loan if it's forgiven. But they didn't know, I guess, that there was already, something in the tax code that says if it's a forgivable non-taxable loan, then the expenses used to achieve forgiveness is non-tax or is not deductible. So it's kind of an interesting way of saying it's taxable. But now specifically in this bill, it came out and said these PPP loan, the expenses attributed to the forgiveness are deductible. Huge benefit to taxpayers here. And wish we would have known this a while ago. But anyway, play with the rules we're dealt, or the cards were dealt. And this is just a huge impact to our clients.
Yeah, for sure. And I think you look back at this, when you read the CARES Act, the congressional intent was very clear, is they wanted this to be a stimulus, not a revenue producing item for the government. and that's what it would have been, because in effect, you're right. Regardless of how tax law reads, it would have resulted in that stimulus basically being taxable, is how you would have to look at it. So this is something that we all thought was what Congress wanted, and Marco Rubio and others basically said that. However, both Treasury and the IRS came out with a contrary position, which, like I said, is not illegitimate. I mean, it's kind of tax law in regard to other tax exempt type income, but it's certainly not what this is intended to do in this circumstance. So much needed guidance here. Like you said, it could have come out a month later. That would have been nice. 2 months, we could have planned all year for it, but instead, it kind of is what it is. So now, we're kind of seeing that this could have a really nice benefit where, maybe a practice has done well throughout the year and they have a little bit of cash. That cash may have been shuttled off to Uncle Sam, and now it looks like they're going to be able to keep it back in the practice and use it to ride out what other storms are coming. I kind of look at it like a second stimulus almost, Jared. It's just more cash being able kept in the business in a period of uncertainty. That's a good thing.
Yeah, exactly what I was going to say. Almost a second stimulus directly to business owners. Let them keep that money and not give a portion of it back. So right. That's a huge deal. Also, in regard to that, we've kind of got written here the uncertainty regarding timing issues with basis. We're not going to get severely geeked out here on tax stuff, but this is a big deal that there is uncertainty regarding, and I try to keep this high level, but it's more of that PPP loan. Let's say it was 100,000. I've got to use numbers here. Let's say it's 100,000. And when that gets forgiven, it's you get to deduct the expenses. It's non-taxable, but think S Corp here, think partnership. That forgiven amount becomes basis in that entity. Okay, but the key is, and that's why there's uncertainty, reading a lot of articles, a lot of things here, is that that's really not basis until it is forgiven. So a majority of taxpayers, if you will, are going to get PPP, I'm going to call it 1.0, the first round of PPP, probably forgiven in 2021. So technically, and that's why there's uncertainty, we're dating this 12/29, that's not going to be basis in 2020. So it could create a couple issues. One, if you have a loss, maybe you aren't able to take that loss because you're limited by basis issues. Or second fold is if you have distributions and that might cause in excess of basis issue because you haven't gotten that basis for that loan. So anyway, uncertainty here, very geeking out here tax wise, but it is an issue that is going to affect several taxpayers.
Yeah, and I don't think you want to get so far in the weeds because, this can make your eyes glaze over. When you start talking about basis, people zone out, and they should. Hell, I zone out half the time. It's complicated, and it's not clear, and that's even worse. When it's complicated and not clear, it tells me we probably need to kind of cool our jets and see what comes down the pipe. Hopefully guidance. Really, we need some guidance on this. Hopefully they'll kind of do some kind of matching principle where it's all kind of accounted for in 2020 and we move on down the road. But until they do, with our clients, we're kind of running what if scenarios on both sides. And that may be something that you'll want to take to your preparer and just ask them, do they have any thoughts on that? Is there any concerns? If you're looking at your basis and it's pretty low or it's zero, that may be a sign that you may want to ask, is it something that's going to affect me? Maybe not. But, it's certainly something that, at least from our perspective, is worthy of note, and we'll be watching it very closely.
Yeah, I anticipate some clarification on this.
Sure.
And again, we say uncertainty. Don't go running off and say those Duckett Lad guys said I don't get my basis in 2020. Right now, it's kind of up in the air. We're trying to figure it out as well. Second point here. Okay, the idle advance is non-taxable and does not reduce the amount of the PPP loan forgiven. Now, I want to clarify this. There was an idle advance. If you guys remember, it was $1,000 per employee, max of $10,000. Okay. And then there was an idle loan. We're not talking about the idle loan, that fixed $140,000, $150,000 loan. We're talking about just that advance. Okay. Before, that was going to be a taxable transaction. And then that amount, let's say it's 10 grand, was going to reduce the amount of the PPP loan forgiven. So in essence, you're going to have to kind of pay it back to a degree or keep it depending on what you wanted to do. Now it's specific that idle loan or that idle advance, is non-taxable and it does not reduce the amount of the PPP loan. Not a huge dollar amount here, talking about 10,000 max, but still a big issue.
Yeah, it's just something that, again, I don't think Congress intended for these to have tax consequences. They wanted to try to stimulate small business by giving them the ability to have access to capital that they don't have to worry about a tail-end liability. So, not, like I said, not huge, but certainly a nice catch by Congress to allow for 100% forgiveness of the PPP and deductibility for some expenses. So again, just a nice benefit sitting in this stimulus package here.
Yeah. So last point here on this slide. So there's, again, we're talking about the first PPP right here specifically. There are additional eligible expenses that qualify for forgiveness. You guys remember back to the first PPP here, those eligible expenses that qualify for forgiveness were the rent, the utilities, that business interest. Help me out, I'm forgetting one. Payroll, the big one. Yeah. Can't forget about payroll. Those are really the big four, or the only four to a degree. Now they've expanded that for some additional eligible expenses. Not going to dive too deep into these right here. Just want to mention them. Most of our clients were eligible to get full forgiveness based on the four eligible expenses before. So we really haven't dove in deep into here, but just to let you know, there are some additional eligible expenses that qualify for forgiveness.
I think what we're going to see is over the next couple points we bring up, they're trying to make it a lot more frictionless to be able to get this forgiven. So another favorable provision here.
Yeah. All right, jumping over here. So still on a few changes here on the PPP. So the covered period, if you guys remember, you could, at first it was the 8 week, then they extended it to the 24. And you basically pick the 8 week or the 24. Now they're saying on the covered period, you can kind of pick any period starting on the date of disbursement you don't have to just pick the 8 or the 24 weeks. You can pick a period in that range, if that makes sense.
Yeah. I mean, it was pretty rigid before. It's either this or that. And now they're saying, well, everybody's circumstances is different. Maybe those two don't work. Maybe it's a different time period that makes sense. So just more flexibility.
Yeah. And a couple more things. So payroll, the one I forgot, right? Payroll costs, they now include employer payments for, some insurance stuff here, group life, disability, vision, dental insurance payments. Again, just making it a little easier for you to get full forgiveness. It was a little more rigid at first regarding what insurance or whatever was included in the definition of payroll costs. They just kind of open that up a bit.
Yep.
The last point here, and that we've heard chatter on this all year, I think, and then finally something happens, but it's basically that in this bill that there is now a simplified loan forgiveness, the PPP loan forgiveness for borrowers with less than 150,000. Okay, before, I want to say sometime latter part of this year, they came out and said, if it's $50,000 or below, we have a simplified loan forgiveness. I think they really made the lenders and bankers really happy here. Accountants to a degree too.
Sure.
Now that bar has been raised to 150. So basically what we're hearing is it's going to be kind of that one-page form to a degree that you send in. You still have to make sure the calculation is correct, do your due diligence internally, but what you actually send to the lender is a lot less paperwork with that $150,000 amount.
Yeah, this is one where, again, you're right. We heard this number thrown around for a while. 50,000 was kind of that number. My understanding is this 150 covers the vast majority of the number of PPP loans. So greatly simplifies the paperwork requirement for the small businesses, for the bankers. But I think a key point is to our understanding, you're still going to certify that you use that money properly. So you'll want to run the tape. You want to make sure that you did it right. But hopefully when it's all said and done, it will be a much simpler process and you can get through it quicker, easier. Again, it's one of those things where, we advise our clients, a lot of CPAs, others were advising their clients to just hang tight, and this is one of the reasons why is we knew there's going to be more clarification coming down. This is a nice provision. So just be ready, have your documentations, your calculations, and if you're good to go, hopefully this process, if you're under 150, is very simple.
Yep. All right, so jumping over, so you guys have probably heard a lot, and I'm going to call it PPP 2.0 here, but it's basically, they're calling it second draw loans. So it's basically a second round of PPP. And what we're hearing from a lot of clients, a lot of people is, hey, Am I eligible? How can I get this? How can I get it? That sort of thing. So just real quick, let's just hit on some of these points. Who qualifies? So who is that eligible recipient? And I'll just go through these points. So basically, small business concerns, nonprofits, other groups. We've got a typo. It says who have 500 employees or less. That is 300 employees or less now. Okay, PPP 1.0 was the 500 employees or less. Now they've lowered it down to 300 employees or less. Okay, that business or organization have used or will use the full amount of their first PPP loan. And then there's this quarterly revenue test. Okay, and this test, again, I'm going to keep it very high level. This test is on a quarterly basis. And again, it's revenue. It doesn't have anything to do with expenses, bottom line. It's purely revenue. And it's a quarter over quarter look back. And so what you would do is you would look at any quarter in 2020. If you go try to get this next year, you can use the fourth quarter as well. I'm going to use an example. Second quarter of 2020, let's say you had revenue of X amount. You would look back to 2019 to that same applicable quarter, second quarter. And what you need to show in order to qualify here as an eligible recipient is your revenue has dipped from 19 to 20 by 25% or more. Did I say that right, Bill?
Yeah. I think that's spot on.
Yeah. So that's the test. It's not just, you feel impact and you can go get it. You have to look at this quarterly revenue test to make sure that you qualify.
Yeah. This is one where they are trying to narrow it down. Certainly we didn't talk about it here because we don't really work in this industry, but, they're really pinpointing restaurants, hospitality, the groups that really are struggling. And, they're putting this out there for those people. So, on the surface, everything looks great here, right? Most of us could probably look back and say, yeah, Q1, Q2 in my practice, I was shut down. So of course I'm going to be down. So let's take a look at the more requirements, Jared.
Yeah. So, and we'll get to the next part here, but so how much is a loan? It's very, very similar to PPP 1.0. Okay. It's very similar to the calculation. It's basically, 2.5 times the average monthly payroll cost. 2019 calendar year, there's another year-long period you can look at there. The change is PPP 1.0 was like a $10 million max. Here it's brought down to a $2 million amount, but roughly very similar calculation. Here's the one you're kind of leading to, Bill, is this necessity requirement. And this one is, this is the tougher one to meet, I guess, is what you could say, because what this means is, if you guys remember back on PPP, the first PPP, when you did the SBA application, I don't have the verbiage right in front of me, Bill, but you basically signed that you, what's the word, Bill? You needed the loan. I mean, to operate, to keep business going, right?
So the wording was current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Now, we don't know exactly what you're going to have to certify in PPP 2.0, but you would assume you would make the same thing. That's what it's for, is the people who are struggling. So, you flash back to March when basically the government says, thou shalt not work. That's very easy to say that you needed to support ongoing operations. The philosophical question is, what does that look like now if there is no shutdown on the horizon, if there is a vaccine on the horizon, if you had your best year ever, after you were shut down? I think it's one of those things that we don't know. And I think the prudent advice is to seek out wise counsel from your CPA, from, attorney, kind of gather your team and really mull this over, because, just looking at the letter of the law, Jared, it feels like a lot of people will, be, what's the word? They're eligible,
right,
to get it. The question is, should they? And that's a question we're not here to answer. I mean, that's not, we're not going to answer that on this webinar, but that's something that we wanted to bring this to the forefront, is this necessity is something that should be giving much consideration, because this is kind of round two, and each time they're kind of refining it and making it a little bit tighter. So what is that necessity? That's the $1 million question, right?
Yeah, that is $1 million question. And you know, I think I read somewhere where we're 10 days from when the president signed this in, SBA is going to come out with guidance. That's a lot of work for the SBA in 10 days around the holidays. But you know, we're going to see exactly what that application looks like and what you have to sign off on and represent when you're doing that application. You know, and another presentation I listened to, it basically was talking about, you know, it might be hard for a business that showed like 1 or 2 hard quarters in 2020, but are now making ends meet to honestly certify that this new PPP 2.0 is necessary. You know, maybe those 1 or 2 hard quarters, PPP 1.0 helped out and took care of, and now you're like back on your feet. You're in a good spot. So this is a very I'm going to say gray area. It's just every business is different. It's just not black and white. You know, yeah, you can. The first slide we just went over, that's black and white. You can do math, but that's necessity requirement is you actually need to have this loan to continue the business operations. So again, everybody's different.
And the beautiful thing is, to that final bullet point is, you know, deadline for second draw is March 31st, 2021. You know, obviously there's always the risk that if you wait, things may run out. However, you know, that's a window that should provide clarification, you know, from the Treasury, but also, you know, probably some clarity in what the flu season shakes out. And are we going to be looking at any other catastrophic economic events? And if it is, then your perspective may change. But again, our job is not to opine on any of this. This is something that you're going to have to think long and hard about, and all business owners are. And you know, if you do need it, then it's there, and it's going to be a nice program that's probably going to help out some struggling businesses.
Yeah, and like you said, the deadline for these second draw loans is March 31st of 2021. You know, so you got 3 months or so. And you guys remember PPP, the first one? I mean, everybody was like, well, how fast is it going to go? I have no idea on this, you know, how fast it will run out. I can tell you this, from my opinion, a lot less businesses will qualify for 2.0 as they did for 1.0, specifically because of the necessity requirement. That's my opinion. But we'll see what happens. Okay. That's PPP 2.0. Just go over real quick a couple of other bigger things that we thought we needed to pull out and just kind of hit on a little bit. One is, you know, the unemployment. You guys remember back with the CARES Act and everything, the unemployment was up to the $600 a week with this pandemic unemployment assistance payments. This is what you heard all year, you know, people in Congress fighting about what that dollar amount should be. It's $300 a week is what they shook out to. The other one, and again, I'm dating this, is 1229, the direct payments to taxpayers. Currently, I think, Bill, unless anything's happened while we're standing here, it's still at the $600 an individual, and $600 per child. I think that's right.
Per taxpayer, per dependent child under 17.
That's right. But right now it's still being discussed. You know, I think in the law 600, but President put it back to them and said, hey, you need to try to up it. The House and Senate are going to see what they can do. But currently right now, these direct payments to taxpayers is the $600. That could change. Just a couple other quick tax changes in here. So charitable contributions, 100% of your adjusted gross income now can be deducted for charitable contributions, both in 2020 and 2021. Okay. I don't know a ton of taxpayers that actually go out and contribute everything to get their AGI down there, but I think it's a great deal if people can.
Yeah, nonprofits got hammered. I mean, that's one of the first discretionary type items that people cut out. And that's why they were eligible for PPP, you know, is that they assumed that people would probably curtail some of that giving. So another incentive to try to help out the nonprofits out there doing good work in the communities.
Exactly. And kind of on that same vein is now there's $300 or $600 for married couples as a charitable deduction for non-itemizers. You know, but before, I guess, and yeah, still to a degree, if you itemize, that's where you get the charitable contribution deduction. Here they're saying, well, if you don't itemize, you take the standard, you're even, and you contribute $600 for a married couple, you get that deduction. So again, just another, piece of assistance, if you will, to the nonprofits to kind of help them out charitable contribution wise.
Yep.
Okay, going down business meals and beverages. So you talk about your meals in your business. You guys always know that's 50% deductible. Now for 2021 and 2022, it doesn't take effect into 2020 that I see. You make it retroactive, but next 2 years, 100% deductible for those business meals and beverages for that deduction.
Yeah, that's another industry just got hammered. Like we were talking about, restaurants, hospitality, certain types of restaurants. Others have done pretty well, but I think just a way to try to get people to spend money on some of these restaurants that are struggling. So nice little perk. May have a decent effect for some people. One thing, to my understanding, Jerry, I think is interesting is I don't think they addressed entertainment, which, if you recall, used to be 50% deductible. Then the Tax Cuts and Jobs Act took that away. Well, a lot of the entertainment type venues have been getting hammered too. So would have liked to have seen something there, because there are good employees who do take time and money to entertain, keep their staff happy. You would like to have seen that, but to my understanding, I don't think that's been addressed in this bill. So maybe down the road.
Yeah, I didn't see anything in there as well. Just a couple more points here. So medical expenses exceeding 7.5% of AGI will be deductible. That goes on your Schedule A as an itemized deduction, but that's been brought down to the 7.5%.
It was at 10%. Yep.
It was at 10%, right? And a couple other ones here. So if you guys remember that employee tax deferral repayment date, that's basically for employees. They had the ability at the latter part of 2020 here to defer the payroll taxes that were withheld, and that they would repay them at the first quarter almost of 2021. That date has been extended to December 31st of 2021. So extended another, 8 months or so. Again, we haven't dealt with a lot of businesses that employees have really taken advantage of that. But if your business has, again, that's been deferred on that repayment date. And the last one, just some extensions of credits. So the extension of the FFCRA credit and also that employee retention tax credit. I know on the employee retention tax credit, don't dive deep at all here because everybody's different, but I know before that employee retention tax credit, you couldn't get if you got the PPP. I know that's changed to a degree, so we just need to see how it applies to your business. But again, there's a lot of extensions of credits in here, but these were kind of the big ones that we really pulled out on that. So again, we just brought the high points out of this bill. I mean, the big changes from my perspective, Bill, would be changes to PPP 1.0.
Yeah.
The tax deductibility is the huge deal. The implementation of PPP 2.0 and how all that works. And again, we expect more guidance, and we'll kick back in video mode here, Bill, as I got a feeling that there might be some FAQs released on some of this stuff that the SBA, once they start releasing guidance and clarifications, we'll try to stay on top of it. But anyway, any last parting words here, Bill?
I think a lot of this was just welcome news for most taxpayers. Again, I deem a lot of the stimulus to be very taxpayer business friendly, especially in regard to PPP 1.0. There will be FAQs that come out. And this is not to say that the IRS and Treasury may not try to put guardrails on this that would require congressional override, because again, a lot of what Congress does is pretty vague and is subject to interpretation. But hopefully this will at least give them enough of a roadmap on the deductibility to know where Congress heads at. And that's the big one. To not want to bury the lead. I think the PPP deductibility is what we've all been waiting for. And I think it's a huge deal for those who are going to get that forgiven.
Yeah. So again, guys, just want to hit the high points. If you have questions, let us know. If you're not a client of ours, reach out to your tax preparer on your specific situation and see how it affects you. But again, we'll keep you updated as stuff gets passed. As we hear stuff come across our plate, we'll shoot a video, get it out to you guys, and we'll let you guys go. We'll talk soon. See ya.
Take care.